Hey guys, this is a market update. The theme for this video is business as usual. Business as usual for crypto. We're sitting at an all-time high on the weekly close here. Business as usual for global liquidity, which is in an uptrend and potentially breaking out. This is a very highly correlated chart to the Bitcoin price. So if global liquidity breaks out, Bitcoin breaks out. And we know the game, right? Huge debt loads at the sovereign level, and they need to stimulate GDP higher. They need to stimulate the price level higher. They need to get currency created from the commercial banks. And if that fails, then you drop interest rates and you print money from the central bank. You need liquidity in the system to pump the metrics higher. That's what they need. But what that also does is pump risk assets higher. And you can see they're very highly correlated. I'll show you this chart in a second. For right now, though, if you want to get the crypto course, there's a 20% coupon code right now. If you type BTC at checkout, you get 20% off. You get the latest updates forever for free. The May update is right here as well, so check that out via the link in the description. 100K is a massive, massive level, and I know a lot of people are selling here. You can see that in the data. A lot of individuals are selling. This was their level, and I get it. If selling some Bitcoin here makes your life better, I fully support that, right? For me, from a purely trading perspective, I think we go much higher for the rest of this bull market, right? But I understand this level right here, as you can see, is huge. There's a lot of sellers. A lot of people are just taking some off the table after sitting through huge volatility over the last few years. I totally get it. There's going to be a load of sellers here. But when they do eventually clear, I think we go much higher because liquidity has to flow into markets. And actually, if you can see, we are at an inflection point where that liquidity has been drawn down from the bear market. All of that liquidity gets sucked out. But now you're seeing inflation really start to fall off throughout the world. Potentially, you need to increase that liquidity again. That breakout is potentially what's going to bring Bitcoin to new all-time highs as well. So we're inflecting to the upside. We need that. China is in deflation. They want to stimulate. Europe's stimulating. We're just waiting for the Fed. They're going to be really late, and I don't care because they're going to capitulate eventually because they need to increase liquidity in markets to increase the price level, which naturally actually comes down. We're seeing inflation, disinflationary pressures throughout the world right now. Look at oil, $60 for oil, huge disinflationary pressure. Right, so there's no inflationary pressures. We all see that right now in the data. The Fed is going to be way too late. Let them do it. Just let them play their game. Our game is actually to keep in BTC and ride it up to the end of this bull market. And I think we go a lot higher as liquidity increases. To tell the story of liquidity, we can look at how Bitcoin has performed this cycle versus altcoins. Now, there's been a few outperformers with altcoins, but in general, the market has been pretty subdued in comparison to what we had last cycle, right? And so Bitcoin has performed really well because of those specific factors. You've had the ETFs, which have been wildly successful, and you've had this TradFi explosion for Bitcoin, which hasn't happened with altcoins. The Ethereum ETFs have been, pretty lackluster so far, to be honest, right? And so you've had that specific price driver, and liquidity has kind of turned up, but mostly not in the US, right? If you look down here, this is global liquidity. So red is actually Asia focused, mostly China, which is stimulating. But it's not the gorilla in the room, right? It's the US, and they need to stimulate to get that alt season. Are they going to drop interest rates? Not right now, apparently, right? Maybe they're going to wait and wait and wait and wait. So they will drop interest rates at some point, and maybe they'll stop QT. If inflation keeps coming down, which it is, that will happen at some point. They'll get a lot looser, which may actually be your kind of alt season and that kind of stimulus. But for right now, Bitcoin is just having that kind of specific price driver. Liquidity is decent worldwide, but it's not like 2020 level craziness, right? And so the trade is to wait for that, to wait for things to get looser. And they get looser when inflation starts coming down because we know the game, right? Pump GDP higher, pump stimulus, get the price level higher, get inflation higher. And if inflation is coming down, that's not what they want. But we have to wait and be patient because the Fed just don't want to cut right now, and they don't want to loosen conditions too much right now versus what they could do. So you have to be patient. I think that will come, not 2020 style, but a little bit of easing is fine, right? But that's going to push asset prices higher. That could actually be the alt season that you're looking for. But for right now, it's just patience here and waiting for that to happen, right? You can see global liquidity is trying to break out, right? But you need the US for it, right? The US is really the gorilla in the room here. You need them to pump liquidity to really get that huge bull market going, like that blow off top, right? So that's what I'm waiting for. And I don't think we need 2020 style. We just need the central bank to say, okay, we've done enough at this point, right? Inflation is actually below target. Now we can loosen a bit. And I think markets are going to really like that. You can see we're not even peaking out for liquidity, right? So that's another factor which we could go much higher in this bull market in terms of liquidity coming into the market. Now, this is the deficit tracker as well. The purple line here is 2025. And if you look, it says the cumulative deficit was 1.3 trillion. After adjusting for some payments, the deficit is 15% larger than last year. So the deficit is continuing. The deficit continues. This is a stimulus for markets as well. So you don't need the central bank, right? You can just have the fiscal side, debt creation. We know tax cuts are coming. That's a huge grower of the deficit as well. So the deficit is going to continue. They're spending way more than they're taking in through tax receipts, and that will continue. So what do they need to do? They need to create inflation and create GDP. Trump is in the Middle East this week trying to create GDP. Literally, he's trying to create investment within US shores to create GDP, push it higher, credit creation. They want to deregulate the banks. They want to get more liquidity out of the banks as well through the SLR. Debt creation, GDP creation, currency creation, pushing prices higher. That is all bullish for risk assets. So just be patient here, but everything's tracking as normal. It's business as usual, right? Huge deficits, business as usual. Liquidity must be injected into markets to inflate prices, business as usual. And when we get that, you could see that business as usual blow off top. But Bitcoin is just outperforming because of those specific factors as well. So everything I'm looking at is like, it's pretty positive for the next 6 to 12 months for risk assets. And everyone's scared about recession all the time. That is not going to make you any money to be scared about recession. You have to figure out, like, well, for a start, don't own currency because you're going to get wrecked over the long term. So if you have money that you want to save, you have to get into assets, right, over time. And for me, I'm bullish on assets generally. And really, for me, the blow off top is an area where I probably actually want to stop buying or scaling back, right, or even sell some. And then after that, once you've created all that inflation, they have to start drawing it down again, and that's the potential next bear market. So, like, I think we're mid-cycle for the liquidity cycle, actually, right? And so Bitcoin has outperformed because of, you know, the ETFs and everything. But mid-cycle, I mean, that's not where you sell, right? You keep buying if you have savings, right? If you have money that's coming in where you don't want to hold it in currency, you have to put it into assets, right? So we're mid-cycle for the economic and liquidity cycle. So I'm not selling here, but I understand 100 is a big level for a lot of people. But just from technicals and data point of view, we're not done here, right? So we go higher. We're starting to see some of the tariff data come through. We had PPI yesterday, which was a very weak number. Some of the data was very noisy in here, but just look around, right? Oil is $60 a barrel. That is not an inflationary environment that we're in, right? You're seeing a lot of the official figures coming way down and coming into trend at 2% and probably will come underneath that. Tariffs starting to get passed through to consumers and businesses, hit to profit margins, weaker retail sales. Tariffs are a tax. A lot of people were worried that prices would go up when you increase tax. That's absolutely not what happens. Taxes reduce economic activity, and they don't increase prices because we don't have any more money to spend on those goods. If I have a set amount of money and the things I buy get more expensive, I don't just buy them because I cannot afford them. I buy less, or I don't buy them, or I substitute down. Tariffs and taxes don't increase economic activity. They are not a stimulus to price levels. They actually crush economic activity, and that's what you can see. I don't know if this, over that 6-week period or whatever it was, is enough to actually disinflate the data where the Fed can then turn around and say, now we're dovish, and I don't think it matters. Look on the fiscal side. The US is still running massive fiscal deficits. That is a stimulus to prices. Then they're going to cut taxes with the bill that's going through. That's a huge stimulus. That's going to create even more deficit on the US side. That's all a stimulus to asset prices. And so, look, we're just going to have stimulus through tax cuts, through fiscal spending, and that's going to push risk assets higher. And if you get any weakness, then the central banks can step in if they need to as well. Don't worry about it. We know asset prices are going to go higher. And so the central bank can step in or not. It doesn't really matter. We're going to get inflationary pressures in the fiat currency as it's spent out and as the government spends more than it brings in through taxes. And if they try and tax, then you get a huge reduction in economic activity, which obviously makes the debt to GDP ratio even worse. It's an unsavable scenario, and that's why we're in Bitcoin, right? Also, I think some bad news here. Bitcoin Strategic Reserve, the sovereign wealth fund for the US, Trump's just saying, look, it's not going to happen, right? Basically, I don't want it to happen. It's a ridiculous idea from the Cantor Fitzgerald guy. He wants to actually use that money to pay off the debt. What money, though? What money? Where are you getting that money from? The money is the currency. If you want to pay off the debt, you have to actually create the currency, which means that GDP has to go higher, which is why they're trying to get manufacturing back into the States. Because in order to pay the debt, you need to find the money, and the money is created out of thin air through banks and the central bank. So this is the whole game, right? Is that they cannot pay off the debt unless they create more GDP. If GDP goes higher, that tries to stimulate prices higher, asset prices go higher. If that doesn't happen and they tax people to try and pay off the debt, that's going to crash GDP. Central bank comes in, prints money, drops rates. We are in the winning position right here in Bitcoin because either way we win. The 20% coupon to the crypto course runs out in a couple of weeks, so if you want that, check the link below. BTC is the code, and you can get a deposit bonus on Bybit if you trade crypto up to $30,000 when you're a new user. Just deposit any amount, they'll give you a deposit bonus to go ahead and trade with. Link below in the description as well. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.